I'm Colleen Derrick with Swaggers Insurance, and welcome to Giving and Generosity. We're on module 3.3, which is that you will die, and if you want to give money when you die, we're going to talk about what that could look like and questions you could ask about giving that to charities. One of the biggest things, and we're going to cover taxes in the next module because death and taxes are two things that are going to happen. Giving to a registered charity in Canada can really have a big effect on your estate impact and the gifts you give to other people. So that's huge. But right now we just want to focus on the death part. When you give a gift to a charity on death, again, being aware if it's a registered charity or not, want to be concerned about who pays and when. And so who does it pay to, and who's paying, or who does it pay to, and who gets the benefit of the tax credit, and when do you get the tax credit, and when do they get the money? And there's a difference on, again, whether you have something that has to go through the will and an executor has to manage that, as opposed to if you have an insurance contract which pays out directly and privately to the beneficiaries. You're going to hear me, it's like, are you a fan of insurance, Colleen? Well, yes, I am. Number one, I am an insurance expert. But number two, in Canada, it's an incredible planning tool that has extremely preferential treatment on death. Use it. And a lot of people aren't, or they're not using it well. And with charities, this can be a game changer. So talk to a professional about how to use insurance to capitalize on a mortality gain, tax-free benefit, and a credit to your estate, which lets you give more money directly to the other people you want to get it to. So, all right. Who pays to get it there? Well, again, if you're having it go into a trust and having that trust payout, then you're going to be paying accounting and legal fees on the trust. And we have accountants and lawyers who can help you with that. It does eat some of the profits on there, as opposed to if you're just giving a chunk sum. Again, I'm going to bring up that donor advised fund, because you can give that into a donor advised fund, which gives you the tax benefit to date, because for all intents and purposes, you've given that money to charities. But you haven't actually given it to the charities yet. So that donor advised funds, the people who make the decisions on that decide when and to which registered charities it gets given to. So that's a tool you may want to consider using. The cost of doing business is a huge impact on this. Again, weighing the differences on doing a donor advised fund as opposed to doing a trust, as to doing a direct gift through the will and paying executor fees, probate fees, and legal fees. Now in Alberta, our probate fees are so nice and small. But if you're in some of the other provinces, that's not necessarily the case. And did you know that you can split beneficiaries on a life insurance policy? The reason I bring this up under 3.3 is because you have a life insurance policy and you want to give to a charity, but you don't want to give the whole thing to a charity. People are like, well, do I have to pick one charity? What if I want to? You can give some to your charity. You can give some to your kids. You can give some to a community project. Your insurance policy, your beneficiaries, your choice. It's private. It's quick. Nobody takes a percentage off of that. And again, there's no tax to you, to the charity, or to your estate. And in fact, if you have a designated charity and you're giving some money to them, you're actually going to get a tax credit to the estate. Very helpful, very useful. Use your professionals. You may have heard me say that a lot in this module. It's true. Go talk to them. This series, again, is not to give you all the answers. It's to get you thinking. It's to get you creative. It's to give you some of the terminology that you're going to hear and explain what it means and help you understand that there's a whole world out there that people are spending a lot of time to learning, educating themselves, practicing, collaborating with other professionals, and you can tap into it and get a better bang for your buck when you're trying to give money to the places that matter to you when you die.